Hello Gr10s, we are still busy with the year-end procedure of a sole trader. So remember, this year we're going to focus on your sole traders, the one-man shows, the sole proprietor, the business that's only got one owner. So we started off a few weeks ago with how do we finish off the year? Because you as owner one day will start a business, and in a certain year normally you would like to see in that year, did you make a profit or did you make a loss? So therefore, a lot of things need to happen at the year end. And what we're going to look at is we're going to revise. Firstly, we're going to look at your year-end procedure again. What is the year-end procedure? What do I need to do first? What do I need to do second? In what order is all these things taking place? So remember, your normal accounting cycle, when we start every month, in the beginning of the year, maybe we're starting with all your source documents. The transaction took place, we placed it in the source document. Those source documents didn't make sense to us because there were so many. So we grouped them together, we placed them in journals. And then these journals don't tell me anything because now, in Gr10 up to now, you've done 10 journals. So you don't really know how much money you have in the bank, how many vehicles do you own, how much trading stock you have. So therefore, all these journals will close off to the ledgers. So remember, we have a general ledger, your normal T accounts, and then you have subsidiary ledgers, your debtors ledger and your creditors ledger, and then to check that everything balances after you posted everything to the general ledger to see that you have contra accounts and that your debits equal your credits, you will set up a trial balance. Now we're going to focus on trial balances today. What different types of trial balances we have. And up to there, we've covered in the first term, a bit in the second term, but now we started here in procedure. So again, the end procedure is, we'll have that last trial balance on the very last month of that year. But not everything is included. Remember, we have the Gr principles. We have the matching principle, which states all income and expenses needs to be taken into consideration for a particular year. Not when I paid, not when I received, but when did those incomes and expenses take place, or when should they have taken place. So we need to do adjustments. So we're going to look at the adjustments. Therefore, I did say we're going to look at trial balances as well. But now, after these adjustments have been put through, you need to do something. What do you need to do? You need to close off. Now, let's see if you can remember. Which section do you need to close off? Definitely the nominal section. All your income, all your expenses will be shown in this nominal section, and that's what you need to close off. Remember, vehicles and land and buildings, all those things are used longer than a year. So I can ask you, do you move every month? Do you move every 2 months? Your parents, do they buy a new vehicle every month or every second month? Or equipment, cell phones, laptops, furniture, do you buy every year a new table or new bed? No, you'll use those things for longer than a year. Normally you'll stay in a place for longer than a year, just like you will stay longer in a year and use those items like vehicles and equipment longer and furniture longer than a year. Businesses will do the same, so it's longer than a year. These things will still be left in the business at the end of the year and therefore kept in the balance sheet section. So all nominals will close off, and that's where we looked at your closing off accounts. We did cover it, but we're going to look at it again today. It's very important information, especially when you go into grade 11 and 12. So let's go and look at the very first question. I want you to write down the full year-end procedure for financial accounts of a sole trader, and I'm going to give you 2 minutes to complete this. I hope you can remember everything and put as much information as you can in your steps when you look at the year-end procedure. So your 2 minutes will start now. Okay guys, let's look at your answer. So your answer you should always start at the pre-adjustment trial balance. That is before your adjustments took place. Now this is again all your information throughout the 12 months grouped together in this trial balance, and this now will start off as a pre-adjustment. Now what goes on? What is next? Your adjustments needs to be done. Now these adjustments are given in point form and normally in sentences. So you need to bring these adjustments into place in your books, and after that you'll do a post-adjustment trial balance. Now that is after all your adjustments have been done. Now what is next? The next step is you need to do closing transfers. Now what are these closing transfers? Hope you can remember them. All these nominal accounts needs to close off to certain final accounts, and these final accounts are called the trading account and then the profit and loss account. Now hopefully you remember what to group in the trading account and what to group in that profit and loss account. Very important. If you don't do it correctly, you won't get the marks. And then lastly, one thing that we didn't look at yet is your post-closing trial balance, and that is after you closed off the nominal section. So what you need to remember is, if we closed off all the nominals, will we have a nominal section left? No. So at the end of the year, we will calculate the profit, net profit, gross profit, operating profit, all those things. We're going to look at the differences in the near future. But then, after all those profits have been calculated and taken to the owner's account, the capital account, you will see only assets and liabilities are left, and then the capital account of the owner. And that is the closing or post-closing trial balance. Now, what are we going to do now? We're going to look at an example again of a pre-adjustment trial balance. So let's quickly go and look through it. So firstly, you have two sections. So here's your first section. And as you can see, you'll always have a nice heading. It's the pre-adjustment, oh there it moves, the pre-adjustment trial balance of Kia traders, and it will be at the end of the year. So this end of the year is 28 March 2016. So what should you be able to do now? What is my start off date for this year? So again, what is my next day? My next day is the 1st of March. But now what is the previous year? 2015. And therefore, if you count from March the 1st, 2015 to 28 February 2016, you will see it's 12 months. So let's look at your first section. Your first section will always have your owner's account at the top, your capital and your drawings, and then get used to it. Then you don't need to look through the whole thing. Normally, the examiners like to put it in order of what is the most valuable assets, or the assets that are used for the most amount of time, like vehicles. I will use vehicles maybe for 5 years, equipment, cell phones, laptops, maybe 2 to 3 years. So therefore they rank it. And those assets are non-current assets. So your non-current assets will mostly be listed here, and then also you lost some value through the few years that you've used these assets. So always note that. Then you have another non-current asset, and that is your fixed deposit from Nche Bank. Then you have a loan, and this loan is your liabilities. This liability will be paid in the long run, so non-current liabilities. And then we look at again your current assets, your trading stock, and then your debtors control, creditors control will be entered, your bank, your cash flows. As you can see, all your assets and your liabilities are listed under your owner's equity account, your capital and your drawings. So that's your first section, guys. What's your second section? Section number 2. Now section number 2, and this is what took place within the year. You have sales, cost of sales, debtors allowances, and then I'm listing all the other income and expenses. Now guys, please be aware, I can give you one column and place all amounts in one column. So therefore it's not a real trial balance, but then I'm testing you to see, do you know what are my expenses and what are my income? Because if it's in one column, I can't say my expenses are shown on the debit side and my income are shown on the credit side. Now, if it's in one column, you need to be able to identify all your income and expenses. So be sure that you know Expenses are things I really can't sell again. So I can't sell my water and electricity account to someone. If someone wants to buy it, please, I would like your number so that you can pay my water and electricity. You can't sell accounts like insurance. If you insure your car, you need to pay for it. No one else will pay for it. And you can't sell it to anyone. That's your expenses. Don't think about stationery. Stationery is normally used if I have a half-written pen. It's again an expense. I can't sell a half-written pen. And if I do sell it, is it really a big amount? Definitely not. Your assets can be sold. So you can sell vehicles, you can sell equipment, you can sell your trading stock. And remember, money in the bank, money in petty cash, money in the till, your cash flow, that's all assets. So be aware. Now, let's go to our very first adjustment list. Now, this is your adjustment list, and this is how you will get them in exam. So our list may be 5 to 10, maybe 15 adjustments for you to complete in an exam. Now, this will be on a paper with a pre-adjustment trial balance or on 2 pages. So always use the pre-adjustment trial balance when you do your adjustments. If you do the adjustments, say you do adjustment 1, you do adjustment 2, you do adjustment 3, you do all of these adjustments as listed, please do them. After you've done the adjustment, please go and fill those amounts in that pre-adjustment trial balance nicely. So if you do it neat so that you can see, yes, insurance went down, so you go and say minus insurance, minus the amount you showed in that line, then all the info is on one page. You don't need to go through different pages to look for information. So if everything is on one page, every adjustment is done nicely on that pre-adjustment trial balance, life will be a lot easier for you. So go and do them on that pre-adjustment trial balance. So for today, I've separated them. So we're going to look at, again, adjustments individually. We're going to see how you should do it. We're going to read them. I'm going to give you the opportunity to do it for yourself. And then we're going to transfer that to the pre-adjustment trial balance. So let's read the first one together. The first one is the debt of a debtor, palesa, of 1,200 Rand must be written off as irrecoverable. So palesa can't pay me. So what should I do with palesa's debt? So I'm giving you a minute. Do the adjustment for me. Okay, guys, I know you got it right, so let's look at it. So I'm going to read it again, and again, read with your teacher when that teacher reads it. So the data of a debtor. So again, a debtor, what are we busy with? We are busy with debtors controls. I'm going to abbreviate a bit, and what you can do is use my steps. I'm firstly identifying the 2 accounts or the 4 accounts or the 3 accounts. So firstly, identify them. I identify the first one as a debtor. So it's debtors control. And what happened now with this debtors? The debtor can't pay. So what do I call it again when a debtor can't pay me and I need to clean a debt or his debt in my books? I will call it bad debts. So that's your next account, bad debts. So now what do you need to do? Now you need to know for every debit there's a credit. You have the 2 accounts, so one will be a debit, one will be a credit. Now debtors and assets. So the assets will be plus, minus, and bad debts will be an expense, guys. So what is expenses? It's plus, minus, but remember that the owner will be very unhappy to have this. So owner's equity will go down because bad debts went up. And what are we decreasing? We are decreasing the debt of Palesa. So she doesn't owe anymore. So we're decreasing it with 1, 2, and there's your credit. Your debtor owes less because we're taking that debtor out of the books and we're taking it to bad debts. So bad debts will go up and therefore your expenses will be more on the debit side. Now, how do I record it in your trial balance, your pre-adjustment trial balance? And I did set it one up for you. Now let's go to debtors. What you need to go and do, remember, debtors go down on the credit, so you can go here or here, but I'm going to do it here. So I'm going to say minus 2,500, and then I'm going to go and look in the nominals. Let's check. Do we have a bad debt here, guys? As you can see, there's no bad debts. So what do? You go down there on the bottom edge of that page, and you're going to write there bad debts. And you're going to say on the debit side 1,200 because it's an expense. And as you can see, I'm trying to use my columns very wisely, so it's very easy when I do my statements, and the statements will follow in term 3. Now guys, we're going on with adjustments after the break, so stay tuned. Okay guys, so we completed the very first adjustment. Let's look at the second one together. Number 2. Interest on the fixed deposit. So interest on the fixed deposit and income. And now they say, what is this interest on fixed deposit? What do we need to do? They say, for 4 months has not yet been received. So they say, interest on this fixed deposit has not yet been received for 4 months. So that bank where we invested the money still owes me the money. We invested the money, but we didn't get all the interest. So what do I need to go and do? I need to go and do a calculation. So I'm going to lead you into this adjustment. So let's go to the pre-adjustment trial balance. And as you can see, your fixed deposit from Nche Bank is 90,000. Good. You're going to use it now at 10%. But now we need to go and look. How much did we already receive on interest on fixed deposit? You see, we did receive some money already. Interest on fixed deposit, 6,000. So therefore, we already received 6,000, but they still owe us for a certain period for the year. So what you need to go and do is, remember, write down the 90,000, that's your fixed deposit, times by 10%. And now I'm going to leave you here. I'm giving you 1 minute to complete the adjustment. Again, identify the 2 accounts and then finish up. So 1 minute starts now. Okay guys, so I already gave you a clue. Remember, I went to the pre-adjustment trial balance. I got the amount that I have as a fixed deposit, which is 90,000. And on that line, they also gave me the percentage per annum that I get on this investment, and that was 10%. But now, how many months do they still owe me? They still owe me for 4 months. So therefore, I need to go and say 90,000 times 10% because this is a per annum. So therefore, per annum means for the full year, but now I'm only owed 4 over 12, so a third. And then if you go and calculate, you'll see the amount of 3,000 Rand on your calculator. So be aware and use your calculator correctly. Your math teacher normally shows you how to use it. Now, this 3,000 needs to be interest on fixed deposit. So that's your first T account, and I'm going to abbreviate interest on fixed deposit. Now, is this an income or is it an expense? Now guys, remember, when I invest money and I get a return on it, it's seen as an income. So income is minus plus, and how much do they owe me? They owe me 3,000 Rand. Now, There's a reason why I didn't identify the other account yet. Because it's a new account. So hopefully you went and you studied these new accounts. Am I as business owed? Does someone owe the business money? Yes. Nshe Bank owes money to the business. So where will I record it? Remember, it's not a debtor. The debtor is normally seen as a person that trades with a business. Now, we're not trading with a bank. We invest money at the bank. So this other account will be called accrued income. And accrued income is like a debtor. It's a plus minus, so it's like a debtor and asset. So accrued income also an asset. And therefore we can go and say plus 3,000 here. Now remember, your assets will be placed at the top, at your balance sheet. So where will I place this now? So let's go look at your trial balance. Now as you can see, you have this as a page. So go and write here at the top, accrued income, because you don't have it as a line entry yet. Remember, it's an asset, so assets go on the debit side. There's your debit. And then let's move down to the interest. You see, here's your interest on fixed deposit. Here it is. So what do you need to do? You need to go and say plus 3,000 Rand. And as you can see, 90,000 times 10%, remember, will give you 9,000. So if you add these two together, you will get the full annual percentage, 10% of your investment of 90,000. Hope you got this one right. Let's go look at the third one. I'll read it together. Included in insurance is an annual amount of 1,320 that was paid. So we paid this amount on the 1st of January 2016. And now, when did we finish this year? Remember, it was 28 February 2016. So I'm going to give you 1 minute to quickly do the adjustments. Identify the two accounts, get the amount, and then place it into the two line entries on your pre-adjustment trial balance. 1 minute starts now. Okay guys, so let's look at this adjustment again. Included in insurance is an annual amount of 1,320 that was paid on 1 January 2016 for fire insurance. So therefore, I have a new date. So I gave you another date. So again, write a timeline, draw it nicely. It's 28 February 2016. Next day again, the 1st of March 2015. But now, when did I pay? I paid here, which is the 1st of Jan 16. So now let's quickly see how many months of this annual 12 months insurance premium falls within this year. I have January, February. So therefore 2 months. Do I care about this 2? Not. I care about the 10 months that falls outside of my financial year. So what should I do? I should take the 1,320 and I need to divide it by 12, and then you will see you will get 110 Rand per month. Now, 110 Rand per month is good, but how many months then does not fall within this financial year? So therefore you need to go and take the 110 times 10 months, and then you will see you will get an answer of 1,100. Now, what two tier accounts am I busy with? What is the expense? Let's see. The first tier account will be insurance. And insurance, again, an expense. It's negative for the owner on the debit side, positive on the credit side because the expense goes down for the year. Now, Did I pay too much? Remember, I paid too much in insurance. I need to take how much out? I need to take 1,100 out because it's for next year, the matching principle next year. So what's my other T account called? Did I prepay insurance? Most definitely. So prepay expenses. Prepaid will be an asset, it's plus minus, and therefore you'll have a credit there and then a debit in prepaid expenses that makes this an asset. Now let's go and put it in your pre-adjustment trial balance. Firstly, again, you don't have prepaid expenses. So you have to go and write your prepaid expenses on your sheet very nicely, and then let's place it on the debit side because it's an asset. But now what happened to your expense? Remember, we go down to the nominal section. So as you can see, the nominal section, here it is. Now let's go look for insurance. Yeah, I found it. So let's see, do we need to decrease it or increase it? Yes, we need to take it out. So we need to say minus 1,100, and therefore this is now taken out for the year, because it's not an expense for this year, it's an expense for next year. Let's go and look at the next one. Adjustment number 4. I'm reading rent for March and April has already been received. So did we receive too much? Yes, we received for March, which is 1 month, and we received for April, which is another month. But this is for next year. So is it the income for this year? And the answer is no, the income is not for this year. These 2 months should have been only received next year, but now it's placed into our books this year. So what should we do? We should take it out. But now I didn't give you any amount, so what do? Go and look for rent income. So let's go and look for rent income, and remember rent income in your nominal section. So let's look in your nominals. As you can see, it's not there yet, but here it is at the bottom. Here's my rent income. So here's your amount, it's 84. So you now need to use this 84 in your adjustment to calculate how much was income received in advance. So I gave you a tip there. So 1 minute to complete this. Okay guys, so very easy. We received for 12 months plus 2. So we received for 14 months. So what should we do? Divide this by 14, then you will get 6,000 Rand per month. But remember, we received 2 months in advance. So what do we need to do with this 12,000? Rent income, which is an income minus plus, needs to go down because it's income for next year. So therefore, I'm taking it out, and then I'm going to open up an income received in advance, and this will be a liability, because if this tenant does not return from maybe an overseas trip or wherever he is, why did he pay in advance? We don't know. We need to pay this money back to him. So let's go look at the pre-adjustment trial balance. Let's go and include your income received in advance. I'm abbreviating, please don't abbreviate, but if it's your rough work, you can abbreviate, and let's place it in your 12,000. Now, what happens to your rent income? Which is here at the bottom. Let's look for it. There it is. We need to minus it. So minus 12,000, and that will be placed on the debit side. Let's look at your next adjustment. Adjustment number 5. Repayments of 20,000 Rand on the loan is paid on 1 June every year. But now they state some of the interest is still outstanding. So now we need to go and look at the loan. Let's go and look at your pre-adjustment trial balance. So here's my loan. Your loan is 250,000, and that's at the end of the year. But now, 250,000 was the final amount. So did we repay something during the year? Yes, we've repaid 20,000 Rand in June. So always look at your interest rates as well. And now I'm going to give you 1 minute Let's quickly write the information. Sorry, wrong slide. Let's quickly go and write down the information. 250,000 was the closing balance, and the interest rate is 20%. Let's go and see, just to give you full information, what was your interest on the loan up to now? There's your interest on the loan. You already have 30,000 paid. So now remember, your 30,000 has been paid. So 1 minute starts now. Okay guys, this is a tricky one. That's why I wanted you to look at it first. Now, very first, let's do the timeline quickly. So the timeline stating we have 250 at the end of the year. And the end of the year is February 28th. But now, when did we start? 1 March. But now, what happens on the 1st of June every single year? We decrease our loan with 20,000. So now, what did we have in the beginning? We had 250 plus 20. So therefore, we had 270. Now think of this. You owe a certain business, a company or clothing shop 10,000. You go and pay 2,000. Therefore, you owe 8. So you owe less. Now, how long did I have the 270? March, April, May. I don't count June. So I had it for 3 months. Then how long did I have the 250? For 9 months. So now you need to go and say 270,000 times 3 over 12 times 20%. And then you need to go and say 250,000 times 9 over 12 times 20%. And if you go and calculate both of them, your full total will be 51,000. So therefore, I'm just taking a shortcut. This amount here and this amount here will give you a total of 51. Now, how much did I already pay? 30 was paid. So therefore, if I take 30 away, how much should I still pay on interest? I should still pay 21,000. Now let's go and place it into your books. Remember, you will have to go to interest on loan. You'll have to go and add 21,000 because it's the expense going up. But now, did you pay it yet? No, and it's not capitalized. You have to go and say accrued expense 21,000 on this side, and there you have it. Okay guys, so I'll see you now after the ad break when we continue with the adjustments. Okay guys, let's look at the next adjustment. Depreciation, I'm quickly going to do it for you. Let's look at it. Follow with me. Depreciation is calculated at 15% per annum on the diminishing balance method for equipment, and then 20% per annum on the cost price for vehicles. So let's go and look at the information. Let's look at your two cost prices. You have vehicles 280 and equipment 110. So if you go and write it down, you'll say vehicles equals 280, and then your equipment will be 110, and there it is. Now, which one is the diminishing one? It is the equipment one. So we need to now minus something for equipment. Where will I find the info again? I will find it on your trial balance, and that is 15,000. So what you need to do, and I'm just going to show you shorthand, you need to minus the 15 here, and then I'm going to look at the percentages. So on vehicles, it's cost price, 20%. So let's go and say times 20%. I have it for the year, 12 over 12. Then I can calculate that answer. And then 110 minus 15, please use your brackets, times 15% times 12 over 12. And then you will get your answer. So guys, when you have free time, go and calculate these. I have to go on to finish all the adjustments. Remember, it's a rush in accounting. You need to finish everything. Just to quickly show you your T accounts, your depreciation will go up on the debit side, and then your accumulated depreciation will go up on the credit side for both accounts, for the vehicles and for the equipment. But remember, you have two different accounts for each one. Let's go on to the next one. Number 7, the owner increased his capital with 150,000 Rand during the year, but this transaction has been recorded. So is this in my books? Guys, the answer is already in your books. So just to show you, you already increased your capital to 400,000. Now, how much was it then before the increase? Very easy. If you have 400 now, the owner increased it with 150, you will say 400 minus 150 will start you off with 250. So 250 plus 150 will give you the 400,000. But this is information that we might need on other things, like when we go and look at the statements. So please note, you don't need to do anything here because it's already recorded in the books. Let's go look at adjustment number 8. The following stock is on hand on the end of the year, the 28th of February 2016. I'm giving you trading stock and packing material. Now let's go and look at the figures. Your trading stock given, let's go and look at it, is 8,400. And then your packing material given, let's go and look for it, is 8,900. So it's 8,900 and 8,400. So let's go and see. Let's go just back. So we counted 8,400 and we counted 8,900. Now I'm going to give you 1 minute to do both of these adjustments. So you need to work fast. Okay guys, let's look at it. So if you go and check, you counted for trading stock, which is an asset, you counted less. You only counted 75, but you should have 8,400. So what should happen to your trading stock? Your trading stock should go down with the difference. And what is the difference? 5,400. And you lost this stock. So you're going to create an account called trading stock deficit on the debit side because you lost. It's an expense and you're going to enter it like that. So let's go and fill it into your trial balance here. We're going to trading stock minus 54 on the credit side because that's how you entered it. And then right at the bottom, because it's a new account, we're going to say trading stock deficit on the debit side 5,400. There you go. But now, remember, your packing material is an expense. So we can't mix the two up. We need to use it in different ways. So if we counted this packing material, when will I use it? If I count it at the end of this year, I'll only use it next year. So therefore, your packing material expense will decrease for the year. And it needs to go down with 2,760. And we'll create a new account called Consumable Stores on, and I like to draw a hand. It's a funny hand, but then that's an asset you're creating. So let's go and fill it in. You'll go to Consumable Stores on hand. And you'll place that 2,760 on the debit column, and you have to go to packing material, which is right at the bottom, and say minus 2,760. Let's go look at the very last adjustment. Easy one. The rates and telephone account for February has not yet been paid, and the amounts are 950 and 650 respectively. 1 minute to complete it. Okay, remember guys, these expenses are for this year. So let's place it into the books of this year. The first one will be rates, and that's named first, so the amount will go to rates first. So rates go up with 950. What other account didn't I pay yet? Telephone, it's named second, so the amount second will go and belong to telephone, so telephone will go up with 650. Contra account, again accrued expense. Accrued expenses will go up with 950 and 650, and now I need to go and fill it into pre-adjustment trial balance, accrued expense, a liability, and as you can see I'm not adding it up, I'm showing it separately, and then you need to go to rates. Where is rates? There's straight nominal, there is it is plus 950, and telephone plus 650 because it increases on the debit side. Now guys, let's go and see if you can remember all the steps for closing transfers. Now, I'm just going to show them for you today because you studied them very hard in the past. So let's look at the steps. The first one, debtors allowances goes to your sales. Step 2, sales close off to trading account. Number 3, cost of sales closes off also to trading account. But now you have these two in your trading account, you need to close that off to the profit and loss account. And what did I calculate in the trading account? I calculated gross profit. Number 5, all the income needs to go to the credit side of the profit and loss account. All the expenses, number 6, will go to the profit and loss account, but on the debit side. And then we need to take this amount to capital. And then the last one is number 8, your drawings needs to close off as well to capital at the end. Now, I'm going to quickly give you a minute to look through the post-adjustment trial balance with me. And I'm going to go and slide through it very quickly to show you, just let's quickly highlight that it's a post-adjustment again, after the adjustments, and just to highlight a few things. As you can see, your accumulated depreciation went up. Most of the things stay together the same, but now as you can see, we have that adjustment in there. Your trading stock changed. What else can you pick up? As you can see, you've entered all of these new accounts: accrued income, prepaid expenses, income received in advance, accrued expense, consumable stores on hand, into your post-adjustment trial balance. And if you go look further down, for example, your rent income, do you see it went down with a certain amount? Now, I want you just to quickly think of, how will I calculate the gross profit and how will I calculate the net profit for a year? If I ask you these questions, let's say I'm asking this one for 10 marks and this one for 30 marks. 1 minute. How will I do this? And jot down a full sentence on how you will do it. Guys, I know you got it right. So gross profit, let's go and see. Let's skip this one quickly. Gross profit will go to your trading account. Remember, you're going to calculate in your trading account. You're doing step 1 and 2. Your sales will go here. And as you can see, sales will be your sales minus debtors allowances go to trading account. Then as well, your cost of sales will go to the trading account. Now, what do? That's step number 3. I have to now calculate the gross profit. As you can see, the biggest side is on the credit side. you take the bigger side over to the other side, same line, and now you can calculate the gross profit. But where do I take this gross profit? I take it to my profit and loss. And now what do I do with the profit and loss? I need to increase profit and loss. Remember, it's a final account, final minus plus on the credit sides. So what you're going to do is you're just going to list all of these income after your adjustments on the credit side, and you're going to list all your expenses on the credit side, on the debit side. So income on the credit side, your expenses on the debit side. And as you can see, all these amounts I'm revealing is shown as your after adjustment amounts. You can look at all of them, see it, look at it, and take it in that these are your after adjustment amounts. And then for this one, the bigger side is the debit side. You take it over to the credit side, and as you can see then, we had a loss. So the owner had to give capital to offset this loss for the year. Now guys, remember, closing trial balance will all your assets and liabilities will be included in your closing trial balance, and there we've done it. All your trial balance is done. I hope to see you again next week. Keep well and practice hard. Bye-bye.